Hey guys, I wanted to bring to you the latest analysis of what is going to be one of my favorite stocks for the next couple of months or so, looking out. And I'll give you a quick sort of preview at that chart. I'll reveal to you what that stock is, what the ticker is in just a minute. But it's a stock that has largely consolidated for quite some time now, underperformed. Certainly in absolute, but also in relative terms. So we will look at this. But in order to take advantage of a stock like this, I think it's really smart to use a specific strategy. And I want to, before I show you the ticker, I want to invite you formally to the next Wealth 365 event. This is still by far the best online education event in terms of a multi-day, multi-speaker venue where you're going to learn a ton of stuff from all sorts of different speakers. I personally always attend and listen to the speakers as well. It's always something for me to learn absolutely as well. But I will specifically be speaking about a strategy that is particularly in this kind of a market in the second year after a recession, where the market is going to be choppy for a bit through the summer and then likely going to see another lift higher at some point in the fourth quarter. Particularly in this environment, a strategy and a little tool that you can use for that kind of strategy. So I look forward to having you guys there. Let's talk about and by the way, you can sign up for that in the link down below, or if you're getting this with an email, there's an email registration link. It's absolutely free. Wealth 365, you get a lot of freebies and all sorts of little benefits to join that. Let's talk about the stock. And some of you guys who may be very familiar with it may have already sniffed it out, but the stock we're looking at here is indeed shares of Apple. And I'm going to make this a bit more fit into the box here. And what we're seeing here over the past couple of months or so, we've started to see an environment where interest rates are stopping to go higher, and we could continue to see this for a while. And we are likely to see a bid come back into some of these mega cap tech stock. Particularly, we're looking at Apple, potentially also Google, and a couple others. But I really want to focus on Apple here. Now, we think that from a valuation perspective, the reality is that this is a company that's going to continue to add on to its services. The ecosystem continues to grow, so we think there's a lot of untapped potential. But if you want to think about it from a professional investor's allocation choices, what do they have? This is a stock that's largely treaded sideways for the past few months, in part because of fear that interest rates would rise. Now, I think interest rates will continue to rise at some point, but they're probably not going to rise crazy sharp. So I think that fear is starting to come off the table, and this is a stock that I think over the course of the next few months has a first target of at 150 and then maybe 160. Again, we'll do this in steps. But this is a strategy whether you are owning the stock. You can get maybe a bit more comfortable owning it as an investment if you want to be a swing trader and buy the stock at 150 or 160 next upside targets through a multi-month lens. And of course, if you're an options trader, you probably know this already, you can lever up those bets in all sorts of fantastic ways. And we think this is an interesting opportunity here for the next few months. Again, it doesn't. Not only does it fit from from a sort of idiosyncratic story around the stock itself, but also it really fits into the broader picture, macroeconomic picture, interest rates, and growth. And we do think this is a name that's likely to come back in favor with another leg higher. So I hope this has been helpful, folks, and I look forward to seeing you guys at Wealth 365 in July. Until then, take care.